Okay, girls. Proceeding with not-for-profit organizations, the non-profit organizations, we have discussed that not-for-profit organizations, children, are those organizations which do not run for the with the aim of generating profits, but still maintaining accounts is indispensable for any organization. Accounts have to be maintained. What are the accounts to be maintained for not-for-profit organization? In lieu of the trading account, here we make the receipt and payment account. In lieu of the profit and loss account, we make the income and expenditure account. And the balance sheets have to be prepared as we prepared for profit-seeking organizations. But here, the only exception that the balance sheet will be prepared in two slots. The opening balance sheet to disclose the opening cash with the opening cash in hand, and the closing balance sheet with the closing cash in hand. And the balance sheet is very similar to the balance sheet of profit-seeking organizations, with assets and liabilities stated as we were doing that. Okay, we will proceed now with the income and expenditure account. I have already explained to you the meaning of income and expenditure account. Now, children, when we prepare the income and expenditure account, the only thing that we have to keep in mind are that all the items that are given in the receipt and payment account, they have to be analyzed, they have to be shortlisted. And in the income and expenditure account, we take only the incomes and expenditures that are recurring in nature. That means those type of activities, those incomes and those expenditures that are one time. The non-recurring ones will go to the balance sheet. The opening non-recurring expenditures will be added to the balances of opening balance sheet, and the closings ones will add it to the closing balance sheet. But what about the recurring incomes and expenditures? That means now we will have to sort them out as all those revenue incomes and revenue receipts. Recurring means revenue. The revenue generating incomes and the revenues, that means recurring. Recurring means, children, it is not that they recur anytime. The frequency of recurring is within one financial period. That means in the period of one financial year, they are recurring in nature. So now when I will deal with the balance sheet fund, the capital receipts, the capital expenditures, and the capital receipts. Now here, children, what are capital receipts? Capital receipts means all those receipts, all those incomes that are generating benefits for the organization, for the NPO in the current year, and the benefits will also keep accruing for them, keep generating for them with the same amounts, with the same receipts. The benefits will be relate to the years to come, the many future years to come. They are called the capital receipts. So the non-recurring nature, I will tell you. So they are main capital receipts. There are 6 main types of capital receipts. We have discussed these in detail once again because these are important and they relate. You just have to remember, as I will read this, the LED and LAR. This is the key word, the key term that you use to remember the capital receipts. L here means the life membership. The life membership fee. E here means the endowment. All these I have done in the previous videos. The endowment fund. D here means the donation. The donations. And donations, not the regular donations. The regular donations, those are revenue in nature. Those donations that are recurring in nature are revenue. They will come in the income and expenditure account. The donations that are specific, that relate to any one purpose, any specific purpose, those donations of those natures will come in the balance sheet. The opening specific funds will come in the opening balance sheet, and the closing donations will come in the closing balance sheet. Then next we have Then after LED, I told you, next are LAD. L means life membership fee. E means endowment fund. D means donation. Next L now. Next L means the legacy. A, this A. A means the sale of assets. Sale of assets. And R, LAR. So R means the reserves. All the reserves. That means all the reserves, in those reserves for which the funds are not related. In case there are funds, there are fund related. I have told you the fund related accounts also. For those we relate, we make a fund, and all the expenses for that fund are deducted from that particular fund only. Charity. So in case there is a fund we create for charity, all the expenses relating to charity will be deducted from the charity fund. Match, any match fund we create, that is very recurring in nature. So match fund we create, so from any expenses to match will be deducted from the match fund. Okay, now proceeding in your textbook, I can see after these 6 things, now we come to now we come to the revenue receipts. The revenue receipts. Children, there are many revenue receipts. Revenue receipts means those type of receipts that are recurring in nature. Those receipts that will happen more, that generally happen, that help us to generate incomes for the current year, the current financial year. So besides the other revenue receipts like rent, like interest, we have revenue receipts are rent, we have interest received, we have commission received, we have entrance fee. I discussed with you entrance fee. There are 2 opinions regarding entrance fee. Some create it as one time capital in nature, as entrance is only once, and some people feel that entrance fee, because for the NPO, for the organization, the members are coming every year, they're joining every year. Members may come, members may leave, so entrance is not restricted to only any one year. So it is taken as revenue receipt with that. In case there is no proper instruction given, then we consider it as revenue receipt only. Okay, now and the major revenue receipt for any NPO is subscription. Subscription. The major thing